It's Wednesday, the 23rd of June, 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Sean Aylmer. Unions fight to force employers to foot the bill for higher superannuation payments that kick in next week. That's our main story. Also coming up in today's podcast, the local share market surges 1.5% as the big banks and miners jump. New National Party leader Barnaby Joyce already causes some angst for both the Prime Minister and the Labor Party. And an $11 billion merger creates a very powerful investor on the ASX. After the podcast, stay listening for my chat to Tim Harcourt about Australia's trade and a free trade deal with Britain. But first, here's a brief look at markets. Wall Street was higher overnight, though trading was thin ahead of comments from Fed Chair Jerome Powell, who was speaking during the morning Australian time. In a prepared speech, Mr. Powell said the current bout of inflation was likely to be transitory, and that helped indexes. In early afternoon trading, the S&P 500 was up 0.4%, the Dow Jones Industrial Average was 0.2% higher, and the Nasdaq 100 hit an all-time high and was trading 0.7% higher. European markets were also better, with London's FTSE and the Stoxx Europe 600 both up 0.4%. The S&P ASX 200 jumped 1.5% yesterday, the best session in more than 3 months. The index finished up more than 100 points to 7,342 points. The major banks bounced from their falls on Monday. Commonwealth Bank rose 2.2% to finish back above $100 a share after its 5% tumble on Monday. Oil groups did well, and the big miners also improved, notwithstanding Chinese authorities reiterated plans to control commodity prices. Real estate stocks did well, while health companies were among the worst performers. Overnight, oil prices were flat. The price of gold was a touch lower, and an ounce for the precious metal was worth around $1,780. The Aussie dollar is trading at 75.5 US cents, and Bitcoin fell below $30,000 a unit overnight for the first time since January, though it has since climbed back above that level. The unit is down 50% since its peak in April. That's quite a fall. Other cryptocurrencies have also dropped amid a crackdown by authorities to rein in the mostly unregulated markets. Rule changes in China were the catalyst for the most recent tumble. With a week until the end of the financial year, unions are agitating for businesses to pay the increased superannuation contribution, which kicks in on July 1. The take-home pay of millions of workers will fall next week, and employee groups have been calling for the rise to be funded by bosses. Yesterday, ANZ Bank warned the finance sector union to stop misleading employees or face legal action after the union launched a petition urging the bank to change its mind and fund the increase in the guarantee. Under legislation that's been in place for quite a while now, the superannuation guarantee increases from 9.5% to 10% from July 1, and then continues to rise to 12% by July 2025. The Reserve Bank, among others, has previously warned that the benefit of increasing the super surcharge comes with short-term pain in terms of economic growth. Employees are realising that their take-home pay next month could be less than what it is this month. Millions of workers will fully realise the reduction, although a minority of companies have said they'll wear the increased cost themselves, effectively giving their workers a 0.5% pay rise. There's going to be a lot of noise around this, and it will hurt the economy, but it's unfair to blame employers for not footing the bill. In fact, when there was discussion about halting increases in the super guarantee rate, the industry funds and the Labor Party loudly argued against it, and they won, and good on them. But this legislation has already passed Parliament. People can't have their cake and eat it too. In the long term, higher savings for retirement is a good thing for everyone, even if there's short-term pain. It's a pity there's so much opportunism when the debate has been fought and won. In a moment, the rest of the news you need to know this morning. In overseas news, house prices in the United States jumped 24% in the year to May, while across Europe, prices have also risen as low interest rates globally push the property market. Iranian President-elect Ebrahim Raisi has wasted no time setting out his agenda, saying he'll support Shiite militia groups, he won't rein in the country's missile program, and he won't meet with US President Joe Biden. What's that mean for us in Australia? Higher oil prices and probably higher petrol prices. And Indonesia's Garuda Airlines lost $3.3 billion last year and is considering dropping routes, including Jakarta to Sydney. The airline will stop flights to Melbourne and Perth next month. Trading in Garuda shares was suspended late last week after the airline defaulted on a $500 million debt repayment. Locally, residents of Sydney will have to wear masks in indoor venues and on public transport after 10 new community-transmitted cases were recorded yesterday, taking the Bondi Junction cluster to 21. The good news is that 8 of the cases were linked to previous instances and were in isolation. Another was linked to the cluster, but not in isolation. Premier Gladys Berejiklian said the fact that there was only one unlinked case, a child in a primary school near Bondi, provided a degree of confidence, though she expected to soon introduce QR codes for everyone entering retail businesses. Ms Berejiklian's confidence didn't stop Victoria from last night shutting its borders to residents from the east, inner west and central Sydney, while New Zealand has closed itself to anyone from New South Wales. Meanwhile, Queensland reported one community-transmitted case yesterday, linked to other cases this week. Queensland Premier Anastasia Palaszczuk said authorities were keeping a close eye on New South Wales. The state lifted restrictions on Victorians travelling to Queensland. Victorians will now also be able to visit the Northern Territory and Tasmania. School holidays start at the end of this week. And the latest vaccination figures show 6.7 million doses have been administered across the country, including 129,000 yesterday. Almost two-thirds of over 70s have had a vaccine shot and almost 50% of over 50s. The federal government has more than doubled its priority occupation list for skilled visas, adding auditors, accountants, chefs and engineers to the list. Immigration Minister Alex Hawke said the additions followed the feedback from businesses and data from the National Skills Commission. The list includes multimedia specialists, software programmers, technology security specialists, I get all that, and foot doctors. I kid you not. The new Deputy Prime Minister and leader of the Nationals, Barnaby Joyce, was sworn in yesterday in an unusual ceremony which included pictures of Mr Joyce and the Governor-General David Hurley on either side of a TV screen featuring Prime Minister Scott Morrison, who's still quarantining in the lodge. Just weird. Mr Joyce immediately demonstrated his ability in question time, taking on opposition leader Anthony Albanese. Later in the day, there were media reports that the Nats were working on a proposal that would involve paying farmers for cutting greenhouse gas emissions. It could be a way of letting Mr Morrison agree to net zero emissions by 2050 without blowing up the coalition. But there were also reports that Mr Joyce's faction within the party wouldn't support such a move. One thing for sure, Mr Joyce's promotion won't make the climate change debate any easier for the Prime Minister. The New South Wales government handed down its budget yesterday, forecasting the state will be back in surplus by 2024-25, thanks to a stronger economic rebound than previously forecast. The budget includes money for electric vehicles, new taxes on developers, new high schools, an increase for public sector workers, spending on health, and help for families from swimming lessons for kids through to dining vouchers. There'll be money for the city's third CBD, as well as trials of staggered school starting and finishing times, hoping to boost productivity and improve flexibility for families. The South Australian government also handed down its budget, with debt levels forecast to hit $34 billion in 3 years' time. Proposed spending includes $18 billion in infrastructure over the next 4 years, the bulk of which will be on roads and public infrastructure. There'll also be $2 billion on health infrastructure and $665 million on education and schools. There's also money for entrepreneurs and business owners. Two of Australia's oldest listed investment houses will merge to create an $11 billion powerhouse with the financial firepower to make or break companies. Washington H. Soul Pattinson's and Milton will combine to become the second largest listed equity fund. The groups invest in a range of companies, and the returns of Washington H. Soul Patts and Milton rise and fall on those investment decisions. Combined, they'll be a very large investor on the Australian Stock Exchange, holding significant sway over boards and management, remuneration reports, and strategies. Crown Resorts Chair Helen Coonan is under more pressure, after the Victorian Royal Commission into the gaming giant heard that she kept knowledge of a potential $167 million tax underpayment from other directors. New non-executive Crown Director Nigel Morrison made the claims and said Ms Coonan also didn't say she already knew of the claim when news broke of it on June 7. An Aboriginal elder who signed off on a landmark agreement with BHP that is critical to the group's iron ore operations has criticised the big Australian for taking 5 months to investigate the cause of damage to a culturally important cave at a mine. According to the Financial Review, Elder Slim Parker said nothing had changed in Western Australia since Rio Tinto blasted the 46,000-year-old Yukon Gorge heritage site in May last year. It comes as debate ramps up over whether Indigenous leaders should have a veto over mining development in the state. Newly appointed Rio Director and former West Australian Aboriginal Affairs Minister Ben Wyatt, who himself is Indigenous, said those demanding a veto could derail important reforms around safeguarding sacred sites. Seven Group has dropped all conditions on its takeover bid for Boral, a bid at $6.50 a share, well below the building materials' current share price of $6.85. I'm not sure why anyone would take the Seven offer when they could just open a CommSec account and get 35 cents a share more. Boral has told shareholders to say no to the offer, and Chair Catherine Fagg yesterday highlighted the $2.9 billion sale of the company's North American business, which could result in a windfall for investors. Ms Fagg said, based on internal estimates, the sale would be worth $3 a share, the inference being that Boral's share price is worth more than the current trading price and much more than the Seven bid. The share price of Newey Limited, the analytics and software company, hit a low yesterday, about half the level of its initial public offering price of last December. The fall follows a story in the Financial Review that said the company must share documents with the federal police, outlining the $80 million in stock options cashed out by Tony Castagna, the former chair of the group. Newey has been a tale of woe ever since listing 6 months ago, losing the chair, CEO and CFO. Shareholders have been the casualties, and it's not very clear what will happen next. And Australians grew their wealth through the COVID crisis by more than any other country, with the exception of Switzerland, according to Credit Suisse's latest global wealth report. Almost 1 in 10 Australians can now call themselves millionaires in US dollar terms, with 392,000 added to the club last year. More than 3 million Aussies could soon call themselves millionaires, the report predicts, thanks mostly to soaring house prices. Up next is the Fear and Greed Daily Interview, and today we're looking at free trade deals. My guest is Tim Harcourt, host of the Airport Economist podcast and TV show. He knows global trade better than anybody. We'll look at the free trade agreement signed last week with the UK, the potential for one with France, and where the trade relationship with China will end up. That's up next in the Fear and Greed playlist, or find it at fearandgreed.com.au. It's Wednesday, the 23rd of June, 2021. I'm Sean Aylmer, and that was Fear and Greed. Enjoy your day.